Hello, my name is Mark LePage. I'm the founder of EntreArchitect, an online platform dedicated to you, small firm architects, to help you build a better business. Today, I'm going to show you the EntreArchitect Hourly Billing Rate Calculator. It is a simple calculator to help you determine the hourly billing rate for you and your entire team, the hourly fee for your team, each one of you, to include your overhead and your profit so you know that your fee is the right fee. So let's get into it. This is video 2 from our EntreArchitect Profit Tools program. Our Profit Tools program is a 3-module video training program to include, and it includes 3 financial management calculators, including this one that we're going to show you today. You can download all 3 calculators and the free training at entrearchitect.com/profit tools. Let's get into the video right now. Okay, let's review the EntreArchitect Hourly Billing Rate Calculator. It's powered by the P2P financial management system for architects, developed by my friend and mentor, Steve Wintner, AIA Emeritus. He's an architect, a management consultant, and the co-author of the book Financial Management for Design Professionals, The Path to Profitability. And by the way, that's where the P2P comes from. So the EntreArchitect Hourly Billing Rate Calculator. Now this is a section of the overall EntreArchitect Profit Workshop and the EntreArchitect Profit Course, which is coming soon. We pulled out the hourly billing rate process to help you determine your hourly billing rates for your team. And there's 2 steps. You have to create some billing multipliers, and we're going to walk through that in the first section. And the second section is to calculate your employee's billing rate based on those multipliers. And so the calculator is going to require some initial information here. And so the first question is, what is the cost to the firm for direct labor planned for this year? And over to the right there's a definition of total direct labor. Total direct labor is the total cost of labor in salaries that can be attributed or charged directly to projects. So when you see the term direct, that means that those are project-related labor hours. Direct labor in this case, chargeable hours, the cost of chargeable hours is $207,600. That's the cost of salaries that went toward direct project labor costs. And that's going to calculate, the calculator is going to calculate the total direct labor. And it's also going to give you a direct labor multiplier, which is 1 to pay for direct labor. And you see the formula for that multiplier right there, C6 divided by C6. So C6 divided by C6, that is actually the 207,600 divided by 207,600. So to pay for direct labor, that we're building up this multiplier here. So that's part of the multiplier that's going to cover the direct labor. The next step is to determine the indirect labor. So if direct labor is for projects, the cost of labor for projects directly related to projects, what do you think indirect labor is? So what is the cost to the firm for indirect labor? Indirect labor is the cost of labor in salaries that cannot be attributed or charged directly to projects. So it's the balance, essentially, of the rest of the cost of labor. So all of the salaries added up is your total labor. Direct labor is how much of that total labor goes directly to projects and how much of that total labor goes to non-project related activities. So indirect labor is labor that cannot be attributed or charged directly to projects. And so in this case, ours is going to be $97,000. And the next step here is indirect expenses. So indirect expenses is the cost of expenses that cannot be attributed, charged, or reimbursable from projects. So indirect expenses are your expenses that are not project-related expenses. So all of your expenses that are not project-related expenses are indirect expenses. So what is the total for that for your firm? So in this case, let's say it's $213,205. And that calculator is doing some math for you. So your total indirect expenses is your indirect labor plus your indirect expenses, because indirect labor is an indirect expense. So your total indirect expenses is $310,205. And that gives you your total indirect expenses. And that, again, is now calculating an overhead multiplier. So the overhead is your the cost of your expenses, right? What's the cost of your expenses and labor So your overhead multiplier, in this case, it's calculating it for you, is 1.49. The formula is C15 divided by C8. C15 divided by C8 gives you a multiplier, your overhead multiplier, to cover your expenses of 1.49 in this case for this firm. And now the calculator is doing some math for you. Break-even multiplier is 2.49. That's adding these numbers, D10 plus D17. So it's adding your direct labor to your overhead multiplier, and it's giving you a break-even multiplier. Now, if you take your hourly rate that you pay your employee and you multiply it by 2.49, that's going to cover the pay rate plus the expenses, and that's where it's going to stop. It won't cover any profit. So what we need to do now is calculate a multiplier for profit. And so the next question here is, what is the firm's target net profit planned for this year? And target net profit is the percentage of the net operating revenue dollars remaining after all operational and all non-operational miscellaneous revenue and expenses are taken into account. We always recommend 20% minimum, so I'm going to plug in 20% here. And the calculator is going to do some math for us. And it's going to calculate a net profit multiplier. And in this case, 0.62 is our net profit multiplier. That is the multiplier, the piece of the multiplier that's going to pay for our target net profit. And the calculation is D19, which is this break-even multiplier, divided by 1 minus C21. So it's taking C21, which is this 20% that you plugged in here, but it's taking the inverse of that. So it's taking 80%. And so it's taking D19, this 2.49, divided by 80% minus D19, this 2.49 again. And that is how you get your profit. And so the net profit multiplier is 0.62, and you add that net profit multiplier to your break-even multiplier. So 2.49 plus 0.62 gives you a planned net multiplier, 3.12, to pay for overhead and profit. So this 3.12 is your magic number. That's the number that's going to allow you to, that's the multiplier that will allow you to pay for overhead and profit. So now let's take that multiplier, this magic planned net multiplier, and calculate your employee's billing rate. So you have a name so you know who you're calculating for. Let's say this is Maria Santiago, and her salary is $100,000. And what is the total labor hours for this employee? Now, total labor hours is your total available hours to work. This is not billable hours. These are total hours available to work. And so most full-time employees are 40 hours per week times 52 weeks per year gives you 2,080 hours per year. And so we're going to plug in those available hours. So in this case, Maria has 2,080 hours available to work. And so some people ask me, where does paid time off go in this number? The paid time off, vacation, sick leave, all those things in the P2P system is included in your indirect expenses. And so it's in this 310,205. It's in that indirect expenses on your chart of accounts. So this is not calculating that. It's giving you, it's already covered that in your multiplier. So you plug in these numbers. Maria is the name. Her annual salary is $100,000. The total labors that are labor hours that are available for Maria to work is 2,080. Her hourly pay rate would be $48.08. This is the amount the employee earns per hour. So this is how much you're paying her, which is essentially C31 divided by C33. So it's $100,000 divided by the number of hours she has available to work. Her hourly pay rate would be $48.08. The calculator is now doing your final calculation, calculating an hourly billing rate. It's taking the hourly rate of $48.08 times 3.12 and giving you an hourly rate of $150 per hour. So the hourly billing rate is a proposed billing rate for this employee, including the hourly pay rate, overhead, and profit. So essentially it's taking the multipliers that we've calculated above and it's multiplying it by the hourly pay rate, and it's giving you a proposed hourly billing rate. So hourly billing rate is a proposed billing rate for this employee, including the hourly pay rate, the overhead, and profit. So now you can do this calculation for each member of your team and determine an hourly billing rate that you can start with that you know will include the pay rate, the overhead, and the profit. And so that's how the hourly billing rate calculator functions and works for you and your small firm. Okay, I hope you liked this video. I hope it helped you determine your hourly billing rate for you and your entire team so you can have a profitable architecture fee. Don't forget this video, this calculator, they are available right now, including 2 other calculators and 3 video trainings complete right now at EntreArchitect.com/Profit Tools. EntreArchitect.com/Profit Tools. You can download the entire 3 video training series and the calculators right now at EntreArchitect.com/Profit Tools. If you like this video, please click the little like button and subscribe to the channel so you'll get my next video, our next video. If you'd really like to get notified, click the little bell button and that will also send you a notification every time we upload. So we'll see you next time. Thanks for listening.